Good afternoon, everyone, and welcome to the Monday Open, hosted by the Vantage private client team. My name is Ollie, and today I'm joined by Steve. How you going, Steve?
Hey Ollie, and good afternoon, everyone. Very good, especially after your sort of jokes.
All good, mate. Welcome back for the third week in a row, mate. You're part of the furniture now.
Yeah, thank you.
Too easy, mate. All right, so moving into the agenda for the week. So we'll start off looking at the key events of last week, putting a spotlight on some of the big market moving events and analysing how the prices reacted as a result. We'll then shift into the week ahead section where we'll have a look at some of the events coming up for the week ahead and putting our take and speculation on where we think the prices will go as a result. We'll then move into the technical corner where we'll put a spotlight on a couple different markets and analyze them using a top-down analysis, using our technical indicators to give a few trading opportunities, trade ideas for everyone here. We'll lastly shift into our Q&A section where we'll answer some of your guys' most commonly asked questions from the week prior. So, moving into last week's section, just wanted to start off by highlighting your guys' top traded products from the week prior. As we can see, probably to the surprise of nobody, we do have Bitcoin sitting in there as well as gold, some of the biggest markets grabbing all the headlights from the week prior. But Steve, did you want to take it away with last week and give us a bit of color on what moved these products?
Thank you, Ollie. Yeah, definitely with the China data. So we saw a bit of mixed data from China, especially the sort of growth slowed in the second quarter, but not as much as previously feared from the sort of tariffs, and that was primarily because of the front loading, just to beat the tariff deadline. We saw the consumer price index for Canada, but definitely the UK was a bit of a surprise. So with the UK, it's actually the highest inflation data since January 2024. And that contributed to mainly the fuel, transport, as well as food and drinks. So, yeah, seeing that UK loves the alcohol, there's a bit of a hit with their everyday outings. I'm sure it'll be a bit of a hit for them. The other thing we also saw was a really big shock was the Australian unemployment rate. So we saw that this was the highest since November 2021. So it was actually forecasted to 4.1. We actually saw 4.3. So it was a major shock. It also is actually the actual rate that the RBA was actually looking for by the end of this year. So now we're looking at the futures are basically pricing in a 94% of an August interest rate cut of about 25 basis points. So we saw that sort of figure. It's quite alarming with the actual unemployment rate. Seeing that it was nowhere close to basically the figures. And Ollie, what were your thoughts on the Aussie unemployment data?
Well, I thought it was interesting for the Aussie unemployment. As you mentioned, it does increase the chance of a rate cut at the next RBA meeting. But I did think it was quite interesting, or I guess maybe not interesting, depending on how you look at it, that the reaction of the unemployment data wasn't really felt on the Aussie 200 either. So it touched on an all-time high price on Friday, but did retrace and close just below the all-time high price. As of right now, I guess as of Monday, we did open at an all-time high price, although it has traded back in for the week. So I know. I guess it's kind of interesting, given that the unemployment data hasn't really weighed too much on the Aussie 200. But yeah, I guess what are your thoughts on that one, Steve?
Yeah, it's a good point as to the indices. So I guess the indices probably saw probably a rise because they were thinking that there's going to be more cuts on the horizon. More cuts means that they're freeing up the actual funds so that business can actually hire more. So I guess a short-term pain for long-term gain overall. But yeah, deep diving into the figures, again, it looks like the 30th of July is basically the key date when we'll look at the sort of June quarterly CPI. So we'll see that sort of, the July sort of figure. So the 2.6 is going to be the figure to really just look at. If it hits 2.6 or below, the likeliness of at least 25 basis points is pretty much going to be priced in. But the questions will be around the 25 or 50 basis points. And just to give you further context, with the unemployment rate, we only saw an increase of 2,000 jobs overall. So um, barely any sort of jobs in that sort of market. We saw more part-time coming up. And I guess the alarming rate was probably the youth unemployment. So basically ages between 15 to 24, reaching 10.2, which is double the national average. So bit alarming on the Aussie front, but we'll see how that sort of other data and some of the key information from next week. But yeah, also to round out last week was pretty much the United States CPI. So the CPI was higher than expected. From the CPI, we actually saw the PPI kind of offset the CPI because the CPI number, so the Consumer Price Index, was quite high, and there was also the inflation from the actual tariffs wasn't as bad as what was predicted, while the PPI, so the PPI numbers were actually better than expected, and um, it was actually offsetting a lot of the accommodation costs. So the accommodation costs from the US. So the US is seeing a lot less international travel, and then a shock sort of retail sales to actually see that Americans are spending quite a bit. What did you think of that, Ollie?
Well, I guess in terms of the retail sales data, I did just kind of want to put a bit of context on that with regards to the Fed. I guess how it will impact on the Fed movements next time. So I guess the retail sales have come down, or sorry, have increased comparative to last time. Sorry, so it is showing a bit of a health in the economy for the moment. But in terms of the US Fed, I wanted to put a bit of color on, I guess, like all the headlines coming around, the Fed and Trump. Obviously, Trump's made no secrets he wants to get the Fed chair out of there. He wants to start cutting rates pretty quickly. But we've seen a lot of commentary from the markets, including a lot of the big businesses out of the States, really, really putting a pressure on them to not do that. We've got JP Morgan CEO Jamie Dimon basically stating that the Fed independence is absolutely critical, citing that political interference can often have adverse effects on the economy should it go ahead. Comments are also reaffirmed by Goldman Sachs CEO Solomon, stating that it is super important, as well as US Treasury Secretary Bessent. But it's an interesting one because I don't even know if it's legal for him to do so. He's throwing a lot of big claims out there. So what do you reckon, Steve? Do you think he actually can do it?
Yeah, I mean, good question, Ollie. The thing is that during the whole week, that was what really took on the headlines around Trump, looking to the House to see whether he could actually fire Jerome Powell, and that just caused a lot of volatility, especially the US dollar got weak. But as soon as those confirmed reports that Trump said that he's not going to actually remove him, then yeah, again, that led to a recovery. But it is one of those important things that you do need a Fed to be independent. Just like the RBA, for example, or the ECB, everything needs to be independent from political influence. So it is a key thing. It is something that's going to shape the markets if it was actually confirmed. And with Trump, we know that he's got dual mandates. So basically, he's looking for the actual interest rate cuts to be sooner because what's going to happen is that the actual interest is paying on the government interest payable. So all the sort of debt ceiling is actually going to be reduced. So it's an interesting one you bring up, Ollie. But yeah, it is one
Who
that's
knows?
ongoing.
Well, we could be seeing another taco for all we know.
Yep.
All right, too easy, mate. And in terms of the crypto space, there's a few acts came out or a few legislations passing in the crypto space, right, Steve?
Yep. So looking at the crypto is interesting. So we saw it hit all-time highs at that 123,000 USD level, and that was pushed by the Genius Act. So guarding and establishing innovation for US stable coins act, as well as the Clarity Act, which is basically the digital asset Market Clarity Act. So the Genius is basically building that sort of legislative framework to ensure that crypto is actually accepted and also the sort of consumer protection, while the Clarity actually looks at ensuring that there's actually definition of where stable coins actually sit. So, for example, whether it's the Securities and Exchange or whether it's actually going to be sitting under commodity futures and trading commissions. So there's two base two basically legislations that house any sort of security within the US, and it's really just having that sort of, as it says, clarity around the sort of where it actually sits. The actual third one, which isn't there's no actual name for the act from what I've seen, is this preventing the US offering central bank digital currency. So that's being that there's no sort of impact from the central bank around these sort of crypto legislation. So it is very key. We'll talk into how it impacts when it comes to crypto a little bit later. But yeah, there's also some developments on the tariff updates. We saw Indonesia 19% was the deal that they agreed to. We've got India. It hasn't been specified with the actual numbers, but it's going to be similar to Indonesia, as well as Europe, 15 to 20%. So
Yeah,
interesting on that tariff front.
that's
What
good.
did you think, Ollie?
Big surprise. Trump was not interested in a 0% tariff with the EU region. Interesting, it did come down from the 30% he put in his famous letter to the EU, but it is looking for a 15 to 20% range. Sorry, they're not budging on the 25% tariff for EU-made cars as well. They seem pretty firm on that. But in terms of the market reaction to when that one was announced on Friday, we did see the USD weaken against major currencies broadly on the day, with the biggest mover coming against the Swiss being down 0.41%. In terms of the euro, however, the reaction was somewhat mixed. The euro did gain against the dollar, the loonie, the pound, and the yen. However, it did lose against the Aussie and the Kiwi. Um, I guess while we're on that one, was touching on on the currency markets. I might just quickly jump into the Japanese election as well. So I'm sure as many people would have seen yesterday, Sunday was the Japanese election for the upper house. So in this election, the results kind of coming out that the Japan's ruling coalition has lost its majority in the upper house. So what this means typically is it's expected to put pressure on the sitting prime minister, and an increasing number of calls for a change in leadership from his party as well as the competitive parties. So historically, when the sitting government loses the majority in the House, it raises policy uncertainty, which surprisingly is typically yen positive or yen supportive due to the rising bond yields and safe haven asset inflows. However, if the upper house loss does deepen a bit further, we could see a yen weaker as the calls for tax cuts continue to take over on there. I guess that brings also to the end of the Japanese election. So I guess we'll move into the key events of the week coming up. Steve, did you want to jump in with the RBA?
Yeah, it'll be interesting to see how the RBA, especially Governor Bullock, speaks and just the sort of tone that she's using. She's obviously mentioned last time with the decision, with the rate decision, but there will be questions, especially on the post of the unemployment rate last week. So it'll be good to see also the RBA minutes, see how they actually came to that conclusion, considering that the vote was 63, which was not even really close if you were to look at that. So it's going to be interesting to see how that's unpacked, because a lot of economists are going to really look at that and just really pinpoint as to what really influenced the RBA's decision with the rates holding instead of a cut of 25 basis points. But a lot of traders will also try to figure out what's on the cards for the next sort of months to see whether it is going to be priced in with the August cut, and then potentially November and February. So we're looking at potentially 25 basis points within those sort of months. But anything can change, as we can see with all the data points. It was just a pretty insane week last week when it comes to the data points. So a lot of the central banks really need to decide how they're going to pivot from that going forward. Also, we're going to be looking at the the euro. So a lot of the purchasing manager index, which basically shows the business activity. So a lot of that's going to show with the Europe data as well as the US. Plus, there's also going to be the ECB decision ahead in
So
regards to yep.
I was just going to say for the ECB main financing rate, I think currently they're expecting to hold the rate at 2.15%. So I touched on it in a video a couple of weeks ago when there was the ECB forum on, I think it was like economic policy, something like that. When they had that meeting, the ECB president Lagarde, she reaffirmed that the Eurozone has reached their 2% inflation target. So given that they've got their inflation target and the August 1st deadline for the tariffs is coming up, I'll be very surprised if there's much movement around that as well. I'd be surprised as well if the ECB press conference, if the ECB president comes out basically saying that they are going to wait for the full impact of the tariffs to be seen before they make a decision. I'm not expecting too much movement on the euro as a result, but that's the way I'm expecting it to play out. But how about you? Do you see it going any other way?
Yeah, I'll be interested to see how they actually speak to the inflation data that came across last week from the UK to see whether that's going to be mentioned or whether that sort of changes the discussion that was previously had. So it'll be interesting to see what they have to say.
Yeah, absolutely.
But yeah, going on to the next is really the Canadian retail sales. So we've covered the CAD previously, and it'll be good to see how their sort of economy is tracking when it comes to the consumer and whether Canada is actually spending or whether they're choosing not to. Looking at the expected, it doesn't look too great from the forecast, but we'll get insights as to how they're tracking, as well as the United States, just to see the unemployment claims as well as the retail sales, just to see again weekly how they're tracking, and showing so far signs that the economy is pretty resilient at the moment. But the next one we'll get into is basically the just going ahead. So I think we're just having.
Had a few issues saying it. That's all good. All right, if we're
Sorry,
having
just
some
having.
issues, that's all
Yep.
good, mate. I think if having some technical issues on that end, I think that's okay. I might just jump into the technicals then for the week ahead. So let me share my screen with everyone. All right, can we see my screen coming up? So
Yep, looks good.
start off looking at the euro against the Canadian dollar on the monthly. So scroll that back onto the monthly. I've highlighted this price point around the 1.615 as a historically significant resistance price. We can see essentially dating back from late 2009, we can see that the markets have come up close to this price point, touched on it in a couple of occasions as well, although it has failed to break above. So for where we're sitting at price now, it is sitting just below. We can see it is in a upward trending market or a bullish market dating back from looks like mid 2022, and it has been slowly creeping up on there. On the Bollinger Bands for the monthly as well, it is hitting on that upper band. So for me, looking on this market, I'm seeing a buy momentum on there. If we move this into the weekly, however, I'm just trying to look for a better idea of potential entry points. So we can see up in here, we've seen higher highs and as well as a rising low price. On our moving averages, we can see they are all fanned out in the correct order, which is indicating there is a buy momentum on there. As well, we still have the RSI line sitting just above its simple moving average, as well as the MACD line sitting just above its signal, although that one is looking close to converging. So for this particular market here, I think I'll move into the daily for a potential opportunity or price action for where we're sitting. So in this one, I'm looking for an upward trending market. So for this, I'm going to be looking to buy in any dips. Can see it's when it did get up close that high towards the start of the month, it has traded back down below its moving average, although it hasn't hit on that lower Bollinger Band, which is indicating to me that there is still some buy momentum in there. For where price is now, I want to see how it reacts with this significant, historically significant resistance price. I want to see if the buy momentum is still in play. So I'm thinking for where we're sitting now, I want to see it come up probably towards its simple moving average. If we see a break above, I want to see a couple of daily closes above that price before potentially targeting its previous swing highs. Where if it finds maybe a resistance at its simple moving average, it could be indicating that we've still got a bit of a pullback on the price before it continues on that momentum. So that's what I'm going to be looking for a signal. As well on the RSI, I want to get a confirmation of a buy momentum, seeing a crossover on our RSI as well as our MACD, which I do believe as it trades towards its simple moving average, we could see. So the next market I wanted to look at is on Bitcoin USD. As we obviously have spoken about in this video already, Steve, that is very much the hot commodity at the moment. Everyone's looking to trade into Bitcoin. So I wanted to see if I get a bit of an idea for potential opportunities. Start off looking at Bitcoin on the monthly chart. We can see it is in a very strong upward trend since late 2022. You can see it's been a rising swing high price or rising resistance price, as well as a rising support price. So it is indicating that there's a buy momentum very much in play. However, I wanted to highlight on our RSI indicator just below here that it is drifting into the overbought area. I touched on the overbuy, oversell in the RSI in one of the Monday opens a couple of weeks back. But for anyone who wasn't watching, once it does break above that 70 mark, it is tending to indicate a overbuy, which historically is met by a period of sell-off, such as here, around here as well, and here. So this is showing to me that although it has touched on some all-time highs, we are likely to see a bit of a pullback on the price. I'm going to move into the weekly chart to get a bit of a better idea of where we sit on this one as well. Can see again, we've got the rising support price as well as the increasing resistance. So where we're sitting now, it is sitting on the upper band. So I'm going to be looking for a bit of a pullback for it to find support before continuing on the upward momentum, essentially finding support as a signal for me that the buy momentum is still very much in play. Now, if we move into the daily chart, we can get a bit of a better idea of what could be some potentially significant support prices. To start the week so far, we are trading up, but I'm going to be looking for the prices to pull back slightly to find support potentially around the 116 mark, which was the open on Wednesday last week. Sorry. So potentially significant support price as well as a previous resistance. If it's able to break through here, we might potentially find support around its simple moving average at the 114K. However, if it does break into this range here as well, we'll be looking for it to potentially find support around here. Once we do find support on one of these significant prices, I'll be looking for a confirmation of this buy momentum through either the MACD indicator or the RSI or both, where I'll be looking for an entry, potentially targeting a new all-time high. Alrighty, so that brings us to the end of the technicals. So we'll move into the Q&A section. So as I mentioned at the start for the Q&A section, this is where Steve and I answer some of your guys' most commonly asked questions from the week prior. So Steve, did you want to take it away with question one?
Yeah, just like you were just talking about Bitcoin and just around the sort of all-time highs, etc. So we did have a conversation with another client who's basically on a perpetual account. So what they do is they're looking at short-term crypto movements, and they were just asking about how does the US crypto legislation actually impact Aussies, and it's a good question in the fact that with crypto, it's always been about adoption, about the legal sort of landscape. So just seeing how it's actually used in every day, and crypto, seeing that the US has adopted a framework to accept crypto, you're going to probably see more sort of inflows from institutional investors. There's already high demand already. But there's also other frameworks that are being established. So Pakistan announced that they're going to establish a framework. We've obviously got at home RBAs looking at Project Acacia in regards to crypto along the pegged against the AUD as a currency. So there are a lot of crypto projects amongst and just in future work. So seeing that the US has adopted this and going forward, I'm sure you'll see others of similar adoptions around the world. So that's really about the impact it will have on us.
Unreal. Thank you very much, Steve. I'll jump into question 2, but just quickly before I do, just want to say a quick shout out to Brenda. Just saw your message saying hello. So thank you very much for joining us in here today. Okay, so moving into question 2. So we got, what is the difference between the NASDAQ and the S&P? So to start off, the NASDAQ is made up of 3,000 companies, specifically targeting towards tech and growth sectors. So for this one in particular, it is more used as a gauge for innovation and market sentiment, and can particularly be more volatile as a result of being a bit more tech heavy, especially in comparison to the S&P 500, which is made up of 500 of the largest companies out of the US, covering all of the 11 major sectors. So because it's covering all the 11 sectors, it's a bit more balanced and diverse, so which can mean is particularly less volatile. As a result, it is used more of a gauge for market representation, for long-term stability and overall market trends for a country. Alrighty, so that brings us to the end of the video today. A recording of this will be uploaded on YouTube following the live stream, as well as uploaded into our VIP chat room. For anyone who hasn't visited the VIP chat room yet, I would highly recommend that you do so. I'm posting in there a lot every day, along with a number of analysts from the from the Everest Fortune Group. We also have a private client daily update as well, covering essentially just a snapshot of the previous session. So if anyone is interested in having a look at that, please feel free to reach out in the VIP chat room or to Steve or I directly. So that's all from me. Thank you very much, Steve, and I'll see you later.
Thank you, everyone. Enjoy your day.